My name is Dr. Harmonics. My real name is Louis. I'm from Ghana and one of the most experienced forex traders in Ghana. So basically, I'm here to impart, and I have barely up to an hour. So I'll just share some little nuggets with you guys so that you guys can have the best of trading experience. Okay. So that's it. So I have 15 years experience on the market. I'm the CEO or founder of BoaFX Academy, previously known as Gold Forex Institute, one of the oldest forex academy in Ghana. I am a swing trader, but I sometimes also go in for the day trading setups. So I have experience across all market assets. So I'm not a kind of trader that will limit himself to one currencies based on my strategy. Okay, so nice one. Okay, guys, I was not prepared. Actually, I thought the time was 6 p.m., but I later realized I had 15 minutes. Let's start something. So there are a lot of traders on the market that are actually doing well in terms of the technical approach. But when it comes to the overall success of trading, they tend to fumble. Okay. Technically, we have a lot of traders, especially in Nigeria, South Africa, Ghana. We have a lot of traders. But what distinguish between the profitable ones and those who are not profitable? Just few things that you need to work on. Okay, so let's take, for example, in the first market, there are other stuffs that you want to look at. Now, first of all, you want to look at what? Strategy, okay? So that's the first thing that you want to look at is what? Strategy. So the first thing that you want to look at is what? Strategy, okay? I'm not here to come and teach you my strategy. By now, you should already have your strategy if you are actually trading a profit, okay? So the first thing that you want to have is strategy. Now, the second one is what? Risk management. Risk management. Now, the third one is what? Trade management. Okay. And now you also have the trading psychology bit. Yeah. Now, with the strategy, you are looking at three aspects. Okay. Now you are looking at the technical aspect, you are looking at the fundamental aspect, and you are looking at sentimental aspect. Now, risk management, you are talking about what? The position sizing. Okay. Then you are also looking at correlation. You're also looking at having a balanced portfolio. You're also looking at leverage. Leverage is it's also important, especially when you are trading with a broker. I don't know about prop firms, whether they have any issues with leverage, but you are looking at position sizing, the correlation of the asset, the balanced portfolio, how you are able to create a balanced portfolio. Okay. Then the next one, you are also looking at a trade management. Now, the trade management, you are looking at when do you scale out, when do you scale, then when do you close half position and all those kind of things. When do you add new trades and all those kind of stuff, yeah? Now, the trading psychology, you are looking at the fact that how you can actually be what? Discipline on the market, okay? How you can develop a long-term trading approach or a long-term trading bias, okay? What do you do when you are in a losing streak? All those kind of things, okay? Building a trading plan, they are all part of the trading psychology, okay? So basically, we are going to look at all these things within 1 hour, okay? And at the end of the period, you are going to actually have an in-depth knowledge or a new approach as to how you should tackle the market. Now, retail traders, even mentors on the market, they are more centered with the technical analysis. I'm very privileged. I have experience when it comes to the broker aspect. And so currently, I am now the zonal director for FXTM. Okay, so I have experience when it comes to the brokerage aspect, and I'm also a technical guy. Now, as mentors or as traders in Africa, a lot of people think about only the technical aspect. Now, we have hardcore technical analysts who always think that they are not interested in the news, like everything is embedded in the technical. Yeah, they don't believe in the news. Yeah, they always think that, okay, the news is already in the technical, like the technical shaping the market. So if you are technically good, the news doesn't matter. Now, the hardcore fundamental analyst will also say that, okay, they don't believe in the technical. Okay, so the fundamental analyst, they don't, the fundamental analyst also doesn't believe in the what? In the technical. So he thinks that the technical analyst or the technical, the price action or the chart is a bunch of imaginary lines drawn on the chart, which do not exist. Now, the sentimental analyst will also look at the activities of the technical analyst and the fundamental analyst. We'll stay back, laugh at them, look at them argue, and take a bias on the market as to which direction the sentimental analyst should go in the long term. Okay, so for me, let me ask you a question. Do you think technical is better than fundamental? Let me know your answer. Do you think the technical analysis is better than the fundamental analysis? Or do you think fundamental analysis is better than the technical? Or which of them do you think is better? No, they go together. They are all important. Okay. Both have their uses. Yes, both are indispensable. Okay. Okay. So let me tell you something. The technical analysis is as important as the fundamental analysis. Okay. And even the sentimental analysis. Now, using the three of them together makes you a very good trader. Let me give you an example. So let's say you have Euro USD or Pound USD buying for you have a very good position on a buy. Then all of a sudden there was a news, or there is let's say there is a news that comes out that Britain is leaving the Brexit. Now, what will happen? It means that Britain economy, like the pound, will actually drop. Okay, the pound will actually drop. Now, with technical analysis, you might have a buy position, but because there is this Brexit, the direction of the market will change. Okay, so fundamental analysis is very, very important, like technical analysis. Now, the sentimental analysis helps you to know the bias of the market. Now, how does sentimental analysis work? So with sentimental analysis, you are looking at the sentiment of investors. There are different classes of assets. We have the risk-on asset and the risk-off asset. Okay, so we'll talk deep. We'll go deep into that. Now, choosing your asset depends on whether the asset is a risk-on asset or a risk-off asset. Adding that to your currency index. Okay, so let me make it simple for you guys. Now, we have risk on, so we are looking at sentimental analysis, because we know that technical analysis, we are looking at the chart patterns, your smart money concept, your harmonic patterns, your Elliott wave, your how do you call it? There are a lot of theories on the market, your ICT concept and other stuff. Now, when it comes to fundamental analysis, you are looking at the economic indicators and geopolitical factors. Okay. When it comes to the sentimental analysis, you are doing with sentimental analysis. Okay, you are looking at the cross-market analysis and the behavior of investors during geopolitical scenarios. Okay, investor behavior. Now, when we had this, the Ukraine war, okay, Ukraine-Russia war. Now, you realize that Russia is the high producer or supplier of energy for the European Union, right? Now, what happened when we had this Ukraine-Russia war? what happened was that investors moved from the European, they stopped investing in the European economy because gas prices of energy were quite expensive. So investors shifted their sentiments from investing in the European economy to other sectors. That is why we saw pound USD and euro USD dropping for a very long time. Okay. And the act of investors shifting from one economy to the other, when we look at that, we are talking about the sentiments of the investors. So sentiments of investors, we are looking at the investors' approach or what investors are thinking during geopolitical scenarios. Okay. Now, another aspect is the cross-market analysis. So with this sentimental analysis, we have another aspect, which is the cross-market analysis. Now, when we are talking about the cross-market analysis, we are looking at risk on, okay, and risk off. Now, what are risk on and risk off? Now, when investor sentiments are high, okay, when investor sentiments are high, we say we are in a risk on environment. When investor sentiments are low for a certain currency, we are saying we are in a risk off environment. Yeah. When do we realize risk on situations? When do we realize risk on situations? Now, when the stock market is booming or when the stock market is performing well, how do you measure the strength of the stock market? You can take an index like NASDAQ or US 100, okay? You can take S&P 500. These are index of stock, okay? So you can use the direction of S&P 500 and US 500. Now, the impact of the stock market also has an impact on the currency market, okay? Whatever happens on the stock market has an impact on the currency market. Now, once the stock market is doing well, you realize that investors' sentiments are quite high. And at that period, you see that currencies like what? Risk on currencies. We have risk on currencies and risk off currencies. So risk on currencies like Australian dollar, New Zealand dollar, euro, GBP, Canadian dollar, AUD, okay. These are AUD, SZ, euro, pound, CAD. So when the stock market is up, okay, when the stock market is up, risk on currencies tends to perform very well. So if you see S&P 500, NASDAQ and the rest being bullish, you see that currencies like Australian dollar, pound, euro, New Zealand, Canadian dollar, all will be going up. As easy as that. They have that kind of correlation, okay? They have this kind of correlation. Okay, now, secondly, during a period of uncertainties, like when there is geopolitical scenarios, like the Russia-Ukraine war, when there is pandemic, okay, you see that risk-off asset tends to perform very well. Now, risk-off asset, we are looking at what? The United States dollar, you are looking at the Japanese yen, and you are also looking at Confederation Helvetica, which is CHF, okay? Now, so when you are trying to look at the asset to choose, first of all, you go to the fundamental aspect of the market, okay, to look at what is actually happening fundamentally with the economic indicators. Then you look at what are the sentiments of traders, okay? Some use COT reports and other stuff, but I don't use COT reports. I look at the index and compare it to the fundamental aspect and choose the risk on and risk off assets, okay? Now, once you are seeing the S&P 500, the NASDAQ, and the rest going up, you will see that assets such as the Australian dollar, New Zealand dollar, and Europe will all be going. Let me show you an example. Let me show you how it looks like on the chart. Okay, look at US 100. You see that it's having a bullish trend, yeah? Now, look at assets like S&P 500, which is the same as US 500. You can see that it's on a bullish run. Yeah. Okay. Now look at AUD or AXY, which is the strength of the dollar, the Australian dollar. Let me AUDJ, like AUDJPY. You see it's also in a bullish run. Now, NZD, you see it's in a bullish run. Look at CAD JPY, let me see. You see it's in a bullish run. So that should tell you this, okay? That should tell you this. Now, Canadian dollar, Australian dollar, even look at Euro JPY. So when I talk about Euro JPY, Euro is a risk-on currencies, JPY is a risk-off currencies. Now, the stock market is performing well, like S&P 500, US 100, and the rest, they are performing well. So I expect that the euro, which is a risk-on currency, should perform well against the risk-off, which is the Japanese yen. You get it? So you see that Euro JPY is going up. Euro is a risk-on currency. Pound is a risk-on currency. Canadian dollar is a risk-on currency. Australian dollar is a risk-on currency. The only risk-off currencies are the United States dollar, the CHF, and what? The CHF, United States dollar, and the yen. Now, gold is also a risk of, gold is also a risk of currencies. Now, it depends. Gold can be different. Now, sometimes risk of currencies might perform well, but gold might not perform well. Why? Because Australian dollar has a direct correlation, or when the Australian dollar is performing well, gold tends to perform well, okay? So sometimes when risk-on currencies are performing well, I tend to treat gold differently. It's just like oil and the Canadian dollar, okay? So you have to understand what are risk-on currencies and what are risk-off currencies. Risk-on currencies tends to perform well when the stock market is booming, okay? Now, when I can go deep like the bond market and other stuff, but I have limited time. So you should, when you are about to select your portfolio, you should group all your currencies as risk on, risk off. Compare the stock market. Look at the performance of the S&P 500, the US 100, and the what? Like the Australian 200 and the rest, all the indices. Okay. Look at their performance, whether they are in the bullish run. Now, look at the price action of them. Anytime there is a breakout to the upside, you should expect that the Australian dollar, euro, the New Zealand dollar, Canadian dollar, the pound, and the rest will also have a breakout to the upside. Okay. So you should look at this correlation with risk on currency. When the stock market is performing well, risk on currencies tends to perform well. Now, when the stock market is dipping, okay, you see that currencies like the dollar, the Japanese yen, and the CHF would be performing very well. Even gold would perform well during risk-off scenarios. Now, another way you can also use to actually determine the strength of your currency. Now, you can look at the index. So you can see that on my watch list, I have index, I have the economy. I would have to analyze the economy of the United States, and based on that, I can analyze the economy of other countries, and based on that, I can then decide to buy or sell certain currencies. But let's look at this now. Let's look at the index. So for the strength of every currency, there is an index. When it comes to the Great British Pound, you can look at the BXY. The BXY is the strength of the pound, okay? So we have EXY, which is the strength of what? The euro. You get it? Now you have AXY, which is the strength of the Australian dollar. Now you have CXY, which is what? The strength of the Canadian dollar, okay? You have SXY, which is the strength of the CHF, Confederation Helvetica. You have DXY, which is the strength of the dollar, and you have JPY, which is the strength of the Japanese. So, for example, look at JPYX, which is the strength of the yen. The yen is dipping, right? Yen is dipping. But when you come to the AXY, look at AXY. AXY is going up. Okay. So in that case, if I'm looking for a setup, I'll be looking at an opportunity to buy the Australian dollar against what? The Japanese yen. Okay. Now, let's look at DXY. Now, DXY, you can see that it's in an upward trend. Okay. So, and let's look at BXY. Now, BXY is in a downward trend. Now, in the long term or in the medium term, I would be, if I want to trade or I want to make the maximum out of trading, now, any opportunity for pound USD buy, I will ignore it and rather trade for opportunity for pound USD sell, because DXY is in a bullish trend. Okay, it's in a bullish trend on the daily time frame, but BXY, which is the strength of the pound, is in a bearish trend. So if the pound USD you are buying, you should know that it will not last for a long time. Rather, if you want to go in the direction of the big players, then you should be looking for opportunity to sell the pound against the dollar. As simple as that. For example, look at the dollar. The dollar is giving us a bullish trend. Okay? The dollar is giving us a bullish trend. Now, look at, because you can see it printing higher highs and higher lows. Okay? Now, look at JPY. JPY has been tanking for a very long time. It's been dropping for a very long time. Now, this is the currency that has performed worse among all the currencies. So what do you do? Now, it means that JPY, the USD is strong, or I mean, the USD is strong and the JPY is dropping. So in every scenario, if I get an opportunity to sell USD JPY, I will walk away. However, if I get any opportunity using whether ICT, whether using smart money, whether using Elliott waves, using harmonic patterns, using Wyckoff theory, any other theory that you use, or price action, classical chart patterns, you want to look for opportunity to buy the USD against the Japanese yen. You should not be thinking about, look at this, you should not be thinking about what? About selling USD Japanese yen. Okay, so once you've done this, so if you do the index, all you have to do is to group them. With the index, you group all the strong currencies compared to what? The weaker currencies. And you look for the most strongest currency among the index, and you match it with the weakest currency among the index, and you look for an opportunity to buy. When you buy, the probability that you'll be in profit will be about 80% or 70%, or even 90%. Okay, so you don't need to be trading anything that comes your way. Now, look at CXY. CXY is in a consolidate. I mean, it's dropping actually, okay, but it's in a consolidation. So I will not look for opportunity to, let's say, buy or sell CXY even against Euro. Like you want to do Euro card. Let's look at Euro card. Look at Euro card. It's consolidating. You can see it's consolidating. Okay, it's consolidating. I will not look for opportunity to trade card, but I'll look for the ones like, look at JPY. JPY is really dropping. Okay. Let's look at assets like AUD. AUD is going up. It's in a bullish trend. So I look for opportunity to buy AUD against the Japanese yen. Let's look at Euro. Now, Euro is dropping. Okay. Euro is dropping. Now, look at Euro AUD. You see that it's dropping because Euro is weak, Australian dollar is strong. So you look for opportunity to do what? To sell Euro against what? Against what? The Australian dollar. As simple as that. Now, what you should also be looking at is, so we've spoken about all these things. That means that anytime you want to actually look for opportunity or decide to actually buy or sell any asset, all what you'll be doing is you look for the index, okay? So you group it EXY, you group it as strong and as weak, okay? Then you look out for maybe DXY. DXY is strong. AXY is strong, okay? Maybe the weak ones, you can come to what? Euro, EXY, BXY, okay? So in many cases, you look for the strong one, all the strong index, all the ones buying and all the ones being weak. Then you compare the strongest one to the weaker one, okay, and look for opportunity to buy or sell. So when you do that, most of the time you'll be in the direction of the big banks. You get it? You'll be in the direction of the big banks. Okay, so because of our time, let's move to the other ones. Okay, so we've spoken about how to choose your asset classes, whether grouping it in risk on or risk off, or you use the index to do that. Okay, now when it comes to fundamental analysis, how do I choose my asset in terms of fundamental analysis? Now, for example, so all economies have targets. So I basically use interest rates and inflation figures. Now, what is the impact of inflation on an economy? The impact of deflation on an economy, okay, tends to actually help the economy, okay, because purchasing power tends to increase. For example, when inflation drops, okay, prices of goods and services tends to be cheaper, and people tend to buy more, which also increases the consumer spending. Okay, now retail sales actually performs well during period of deflation. For example, the United States economy, there's been a lot of deflation. Okay, now the inflation figure was expected to drop up to 2.0. Okay, last year. Now it has even been revised upwards, but it's still dropping, the inflation figures. It means that prices of goods and services will look cheaper, and retail sales would actually perform well, which will boost the economy, thereby making the United States perform well. Now, when there is deflation and interest rate is at the top, at the end of the day, Fed is expected to reduce interest rates. So let me give you an example. Let me show you how I look at the inflation and deflation of the economy, okay? So let's go back to so let me give you this. Now, this is the interest rate. So let's look at the interest rate for the US economy. Now, it's sitting at 5.5, okay? It's sitting at 5.5. Now, look at the inflation figures. The inflation is sitting at 3.3. Now, interest rate has been sitting here since when? 2023 July. But inflation has been dropping since 2023. Let's look at 2023 July. I think interest rate has even been sitting there since 2023. It reached the peak of 5.5. It has not dropped since then. Now, inflation figure is dropping. The long-term effect is that inflation should drop to like 2.8. Now, let's look at the target. Before that, let's look at the target for the inflation figures. I'm sounding quite technical, but that is a lot of experience on my mind. So I'm trying to open your mind to certain things that you people don't look at, so that you can begin to do research on it and also make decisions from all these things. Now, when you look at the federalreserve.gov, and this one I did not learn it from anywhere, you have to do a lot of research, okay? Now, look at the inflation figure. Now, the projection has been revised from 2.0 to 2.4, okay? Now, the long term is what target is 2.0. That means that in the coming years, we are expecting the inflation figure to drop toward 2.0. Now, it is sitting at 3.5, and they are saying that it has not even reached the 2023 target, which is 2.8. That means that inflation is expected to drop more. Okay. Now, if inflation is expected to drop more, that means that the purchasing the price of goods and services in the United States is expected to look cheaper, which will then increase retail sales. And okay, so retail sales, yes, and it will also increase consumer spending, because when things are cheaper, consumer spending tends to also increase. So even at that point, investors or business people have to buy a lot of goods to sell, okay, so that they'll make profit out of it. Because with the little money, they can now buy more because inflation is dropping. But you see, ironically, interest rate is also sitting at 5.5 at the peak, which is bringing in a lot of investment is high. A lot of investments are coming in, which tend to build the treasury of the United States. That means that a lot of money is coming in, which is also positive for the United States economy, because the interest rate is sitting at 5.5, which is the maximum since 2023. So people are not withdrawing their investment. That means that the treasury or the money sitting at the treasury of the United States is still good. People are not withdrawing their money, okay? It means that the United States economy is going to perform very well, okay? Now, it is also said that Fed is expected to also reduce what? It's also expected to reduce the rate, interest rate, okay? Just about one time in the whole year, okay? So it will be, interest rate will be around 5.25. That means that there should be a 25 basis point reduction throughout the whole year, okay? 25 basis points, which is between 5.25 to 5.5. You can see over here that the interest rate is sitting at what? 5.5, okay, 5.5. You can see it over here. That means that if they are supposed to reduce interest rate to 0.25 basis point down, it means that interest rate will not reduce drastically, but inflation is expected to drop more. It means that the central bank, since interest rate is still sitting at 5.5 and it will be reduced to 2.5 even at the end of the year. Now, interest rate is also expected to drop to like 2.4. In normal cases, as inflation is dropping, Fed is expected to reduce interest rate so that it will also go down proportional to the reduction rate of the inflation figure. But Fed is not reducing the interest rate because the US economy is still doing well. Consumers are still, buying stuff because of the inflation stuff, and interest rate, there's a lot of inflows from external economies like the Japanese economy, which has low interest rate. So they invest in the United States economy to get higher returns. So there's a lot of inflow of cash whilst the inflation figure is still dropping. That means that a lot of buyers will now have access to what? Will now buy a lot of goods, or the consumers will now have money to buy a lot of goods. And that means that the United States economy is expected to perform well. That means that in the long term, you should see the United States dollar performing well for a very long time. Now, the only reason why you have the United States economy not performing well is the fact that Fed will have a rate cut. Okay, so if it's reduced from 5.5 to 5.25, which is 25 basis points, you see that the United States dollar will have a bigger correction. Okay, now, since they are saying that by the end of the year, there might be only one rate cut, it means that they will not see a significant reduction of the United States dollar dropping. That means that we are going to see the United States dollar performing very well till the end of the year. That is the whole thing. So in my mind, and you see, technically, you can also see that DSY is performing well. The pound is also what? Reducing. The strength of the pound is also now performing well. It means that I would only look for opportunity to sell Euro USD and Pound USD. When it's buying, as a day trader, you can buy, but don't be thinking about long term. Rather, when there is an opportunity for Euro USD sell and Pound USD sell, be looking at what? Long term. That is how you can combine fundamental analysis, technical analysis. I hope you get me. So both fundamental analysis and technical analysis is very, very important. Okay, so then I've finished with the fundamental analysis and technical. So the sentimental analysis, there's nothing like, looking at charts and other stuff. It's just about what investors are thinking. So if investors are thinking that inflation is going to drop, which will improve retail sales and other stuff, okay, it means that in the long term, you should be looking at the United States economy performing very well, okay? And that means that they will shift their attention to the United States dollar. And that is how sentimental analysis is done. Okay, so we finish with that. Now let's look at risk management. Because of prop firms, we would limit ourselves to prop firm. Now, so let me go back to risk management. Now, when you talk about risk management, you are not looking at just position sizing. So you are looking at position sizing and you are looking at correlation. You will see some people, they can place like 100 trades at one position. Okay, so I'm asking, what if the trade goes against you? You are stacking, hey, you are flipping. Okay, guys, so let's look at position sizing. Now, how do we trade prop firms? Okay, how do we trade prop firms? Now, let's say you bought a $50,000 account. Okay, so $10,000 account. Now, your first phase, you are not supposed to lose 5%. That's the overall. Okay, 5%. Now, this is $10,000. So what you need to do is to convert this $10,000 to 100%. Now, you are not supposed to lose 5% of your account. That means that if you risk 1% per trade, it means that if you have five trades running and all of them hit your stop loss, you are going to lose this account. So what you can do is that you can start with maybe 0.5%. Now, this 0.5% and maximum, you can have, let's say, 2%. So it means that at any point in time, any trade that you want to, any trade that you want to place, okay, you should not raise more than 0.5 of your capital, okay? I'm talking about the phase one of Willis Capital. So you should not raise more than 0.5% of your account. Now, the maximum number of trades should not be more than what? 4. It means that at any point in time, you should not have more than 4 trades running because you want to what? Reach the maximum of 2%, which is less than 5%. Okay, so if you are risking 0.5% per trade, that means that you should not have more than 4 trades running. Now, that 4 trades running doesn't mean that you should have Euro USD 0.5, Euro USD 0.5, Euro USD 0. No, you should be strategic when you are choosing your asset. So first of all, I told you about risk on and risk off. So you can have an asset like Euro USD 0.5%. You can have an asset like maybe AUD JPY. Okay, so this is a major currency. This is a minor currency. You can have an asset like maybe crypto. Okay, you can have maybe crypto. I don't know whether they provide this thing for crypto, liquidity for crypto. Okay, and you can also have, let's say, an index like US 100. So now when you have Euro USD, the correlation between Euro USD and AUD JPY is not like 100%. It can be like 0.6 or 0.7. It is directly correlated, but not so correlated. Okay, so you can have an asset like Euro USD 1 trade, AUD JPY 1 trade, crypto 1, so that you can have a diversified portfolio. Okay, you should not have Euro USD, then you're going to have Pound USD, you're going to have NZD USD, and you have AUD USD. Now, the probability that if this one hits your stop loss, this one will hit your stop loss, this one will hit your stop loss, this one will hit your stop loss. because they are positively correlated. All these ones are positively correlated. Do you get it? Now, let me show you something. Now, if you trade Euro USD and you trade Euro JPY, do you know what you are doing? These two trades, you are wasting your money. If you trade them, it is Euro USD and Euro JPY is the same as trading, if you are trading Euro USD and USD JPY, okay, it's the same as trading Euro JPY. Now, look at the price of Euro USD and Euro JPY, and USD JPY, and multiply it. You will see that it will be equal to the price of Euro JPY, okay? So instead of you trading Euro USD and USD JPY, rather go for Euro JPY because the price is the same. They all have the same correlation. It's something you might not know, okay? So it's something you have to also learn. Now let's look at position sizing. When it comes to position sizing, let me share something for you guys. I'm sharing a calculator for you guys, yeah, right? It is the best calculator you can actually use for position sizing. A lot of people are always like, me, I don't risk 30 pips. I don't risk 20 pips. My stop loss is no more than 10 pips. It doesn't work like that, my brother. It doesn't work like that. So I'll give you an example. Okay, so I've sent you a calculator. That you can actually be using for your position sizing. Now, it's the best calculator I've ever used. So let me show you how to do position sizing. Okay, so this is an example. This is how the Forex calculator works. Okay, now when you open it, you choose the dollar, the currency is dollar, okay? Then what you need actually is the position sizing, which is this one, position size. So you go to the position size, okay? Then let's say you have $1,000, okay? So your account currency, so if you're having a dollar account, Willis Capital will provide you with a dollar account, so dollar, okay? So let's say you have your account balance, you bought a $25,000 or $50,000 account. Now, we said that we want to raise what? 0.5% of our account per trade. Now, by default, you see it like this. Now, you see this three dots over here, this three dots, you click on it and you choose percentage. Now, you want to raise 0.5% of your account, okay? Now, you go down, you see stop loss over here. So that's why people will be saying, I'm using 20 pips stop loss. I'm using this. You cannot be calculative enough. Stop those pips. Now, click on the three dots over there. So you click on the three dots, then you choose price. Now, what is your entry price? So let's say your entry price for Euro USD is, let's say, so you put in your entry price. Let me take one example so that I can actually, so let's say you're having Euro USD, okay? Let's say you're having Euro, okay? And I want to show you something. So let's say you have Euro USD with 1, 2, 3, 4, 5. Now, let's say you are having this, okay? Let's say you're having this. This is Elliott wave. So you can choose your own analysis, okay? Now, let's say Euro USD, over here, Euro USD was supposed to, it's supposed to go up from here, okay? And you are here. Okay, now it touched this level. It's supposed to go up. Now you come to the 15 minutes time frame. Oh, sorry. Yeah, you can't see my screen. Okay. So let's say you have this. Okay, you have this Euro USD. Now, so let's say you have this and you check the fib level for this one. I'm using this one as an example. It's 61.8. Now, actually, I was expecting a buy for this one. So let's say you have this and you are targeting around 61.8, between 50 to 61.8 here. Okay, so let's say you have this. Now, this is an ending diagonal. So with 1, 2, 3, 4, 5, this Elliott wave X with 1, 2, 3, 4, 5. Now, you're expecting a breakout of this one to this level. Okay, so now you go to the 15 minutes time frame. Okay, there was a break here, a change of character, came back to this level. Okay, I don't know why I'm teaching smart STR strategy here. Okay, so let's say this. Okay, now we're expecting this one to move up. After the end of the fifth wave ending diagonal, there was a troll over this Elliott wave. So now, if you want to place this trade, what you want to do, you will not be thinking about me. I don't put 20 pip stop loss. I don't put whatever. It doesn't work. I'm telling you. So what if your 20 pip stop loss is here? Does it mean that you're going to put your stop loss over here? No, it doesn't work like that. Your stop loss should determine your loss size. So you can put your stop loss over here below the last candle here. Okay. Then you can look over here as your take profit one, or here as your take profit one, take profit two. Now, with this, you are looking at what? The risk to reward ratio. Sorry, shit. I want to go to the others. Where is the position? Where is the okay? So you are looking at this. This one alone should give us what? 1:3.6. Okay. Now, so if you want to do this, let's record the prices. 1.06804 as the entry price and 1.066. So let's start with the stop loss. 1.06644. So you have here stop loss 1.06644. Okay, and the entry price is what? The current entry price is 1. It will be changing dynamic. So that's the last thing you place in your trade. So don't think that the market will go and leave you. The market will not run away. So the next one is 1.06804. So you have here 1.06804 as your entry price. Okay, as your entry price. Now, what do? So you go to your calculator. Okay, so you have your $50,000 account. So you have your $50,000 account. Here is 50,000. You are risking 0.5%. Now, what do you have as your stop loss? That's what you put first. Now, okay, someone said the example was 10K. So let me put $10,000. Okay, so the stop loss is 1.06644. So you come to the stop loss. So you click on the three dots over here and choose price. Then you come to stop loss 1.06644. And the entry price is what? 1.06804. 1.06804. It might move a little, but just pick the price that you recorded it. Now let's scroll down. You see that the standard lot that you are supposed to choose will be 0.312. So this 0.312, that is what you go and use. You see, we have standard lot, mini lot, micro. So you use the one that's standard lot. This 0.312 is what you go and use to place your trade. So that when you lose exactly what? Exactly $50, okay, which is 0.5%. So you can have multiple assets, say 4 trades running at the same time. So all of them, you use position sizing. And at the end of the day, when you hit your stop loss. So with this, you can do any other business. You can go and sleep, because at the end of the day, it's either you hit your stop loss or it gets to maybe middle of your trade and you take half position. So you can go and do any other thing, because if you are sitting by the PC or you are sitting by your laptop, if it will hit your stop loss, it doesn't mean that because you are sitting behind the PC or the laptop, it's not going to hit your stop loss. It will hit. So rather go and find something doing. Okay, you can go and play game. You can go and do more research. You can go and cook. You can go and do. Okay, with your wife. You can do any other stuff and still trade. You can do any other business and still trade. Okay, so it's very, very important. Michael, you are bad. What did you hear? Okay, so you can place your trade, set your stop loss within some time to go to middle of your trade, and you can come and close. So in a day, you can watch your trade like 2 times, 3 times or so. You don't need to be behind your laptop or PC all the time. Okay, it doesn't work like that. Okay, it doesn't work like that. So this is how to do position sizing. This is how to do position sizing. Now, another thing that I want to show you guys, okay, so it's leverage. Now, if you are trading news, it's about risk management. If you are trading news, okay, if you are trading news, there is one thing you should avoid. Now, brokers like Exness, all the big brokers, I don't know of, in fact, FXTM is not part. Okay, FXTM. But Exness, Watford, any other broker that you know, I've not seen that with ABS or so. Now, normally, if they give you, let's say, 1:3,000 or 1:1,000, now doing high impact news like CPI, NFP, and the rest, okay, what happens is that they change all the leverage at the back end, which you not see. They change it temporarily to 1:200. So you can have a trade running, all of a sudden, shoo, your account is, they'll close all your trades. Okay. So sometimes you can have a broker, sometimes even with Exness, I've seen that. Now, sometimes the news will come out and the trade will not reach your stop loss, then it will go and close your trade. Or the trade can even go below your stop loss. And since the order has not been filled at the end, you are selling, the buy has not been filled, it will still eat more into your stop loss. Now, what you need to do is when you are trading news, there's one thing you need to avoid. If you do your position size, if normally your position size, you raise 0.5, during news, reduce it to like 0.3 or 0.25, because there might be situations where it might eat down into your stop loss because the other side of the trade has not been filled. Okay, so it's very, very important that if you are trading, you should be careful about that. Now, if you are calculating position size for assets like US 100 and S&P 500, now you should understand the broker. There are brokers that have like times 10, others have times 1, others have times 100. So you should look at the broker, what it's, the digits in terms of, okay, so let me show you. Let me see if I can get something like that for you. I normally see it on the PC details. Okay, so when you go to the details of the pair, okay, let me show you. Okay, 0.01, maximal, minimal. Okay, so when it comes to Willis Capital, I can see that they have their volume step to be 0.01 and they have minimal volume to be 0.01. Now, you have others who, the other brokers that have 0.1, some have 100. Now, it means that when you do your position sizing, you have to strike it divided by 10. Okay, so first of all, when you are treating assets like US 100 and you are doing position sizing, first of all, start with 0.01 and look at, the size, the tick size, and do proper position sizing. Then you can know whether it is, you have to divide it by 10 or you just have to leave it like that. But when you come to the volume step or the minimal volume, there are brokers that have 0.1 and there are brokers that have 0.01. The 0.01 normally has, when you do position sizing, is the same, okay? But when you have 0.10, normally you have to divide it by 10 to get the right position size. So each broker and the way they treat indices. Okay, so let's go to the next one. The next one we are looking at, we've done the fundamental analysis. Now, let's do the trading psychology, which is the last one. Okay, now when it comes to trading psychology, we are looking at emotional discipline. So there are people who tend to fear or they are greedy or they overtrade. So first of all, to avoid fear, you need to do position size. You need to have a trading plan. Okay, you need to have a trading plan to avoid fear. Now, how do you design a trading plan? Now, with the trading plan, now, how do you have a trading plan? So with the trading plan, okay, so let's start with the first one, which is you need to identify the trend. So you can start with the weekly, the daily, and the 4-hour. Look at the bias. Then you come to the 15 minutes time frame. If you're a day trader, you come to the 15 minutes time frame to make your execution. If you're a swinger, you normally trade on the 1-hour time frame. Okay, on the 1-hour time frame, you want to check the trend of the weekly, daily, 4-hour, and see the overall trend. Then you come to the 15 minutes as a day trader. Okay, then you come and do whether your smart money concept, your harmonics, whatever, and you put it over there. Okay, so with that, with the 15 minutes time frame, that's where you would look for your setup based on the theory you are using to trade. Okay, now I always advise people or traders to learn everything. For me, as I'm sitting here, I know smart money, I know ICT, harmonic pattern, my strength, Elliott wave, my strength, smart money concept, my strength, ICT, Wyckoff theory, I know all these theories. So anytime I find myself, you see, when you're trading, you need to have a plan A, plan B. So because you can have a head and shoulder pattern, okay? You can have a head and shoulder pattern. Then instead of this one going to form a shoulder and drop, then it will go and form a double top. So, or you can just have an impulsive wave, then you have something like this, okay? Now, at this point, you don't know what to do because you saw a break of structure, you're expecting it to come here and drop. What if it comes here? Some will say liquidity has been taken, buy-side liquidity taken, and is dropping and other stuff. Now, Elliott waiver will tell you that this is an expanded correction. So we have regular flat, expanded flat, and running flat. So you need to have a vast knowledge about different kinds of theories so that when you have a pattern and it tends to change, you would understand, you have a plan B that I don't need to close my, okay, I'm risking 0.5. If I'm able to increase my risk to 1% and I'm having one trade running, it will not have that deep impact on my trade. So why don't I increase my stop loss to 1%, okay? Because I don't have other trades running, and rather trade the expanded flat so that even though it is here, when it gets to this point, potentially it might reverse. At the end of the day, if it hit my stop loss here, I'm going to lose only 1% instead of closing it and losing 1%, 0.5. However, if your plan B is exhausted, then you know that you have no hope. Okay, so that means that you lose 1% of your account instead of losing 0.5. But if you are supposed to sell here, and potentially this thing can form an expanded flat, and it can potentially come here and drop, I'd rather leave it and risk the 1% instead of the 0.5, because 1% will not make Willis Capital to close my trade. So I'd rather trade the expanded flat instead of using smart money concept only, and I would want to sell over here. You get it? So you should have a plan A and a plan B. You should have different theories so that if you are trading with smart money concept and there is a possibility that the trade would form an expanded flat, then you go with that. So you should have a plan A and plan B. So you should identify your trend weekly, daily, 4-hour, and the 15 minutes. Then the 15 minutes will be your execution. If you're a day trader, if you are a swinger, you use 1 hour as your entry criteria. Okay. Then you should also have an exit theory, an exit theory or an exit plan where you can close half position when it reaches maybe 50% on the number of pips that is expected to run. Okay. So 50% of the pips, you close half position. You should have all these things. And you can also exit when it goes fully. Now, let me show you an example of my trading journal so that you have an idea how it looks like. Now, this is an example of my trading journal. Okay. So let's say I have $9,000. Okay. Now, look at this. I'm expecting a breakout of the ending diagonal to 61.8, like this one, like this trade that I showed you. Okay. I'm expecting the breakout to the upside to 61.8. So you see that I have it over here, 61.8. Long entry price this, stop loss this, full target is this, the IRR is this, partial, when it gets to this point, I'll close partial profit. The loss size, when I did my position size, I'm using 1, okay? So as and when you make profit, the amount will be increasing, okay? Then your after comment, the comment, why are you executing the trade? How many days? So when you close the trade, how many days did it run? What was, did it reach the full pattern or you close half? Now, if you hit your stop loss, why did they hit your stop loss? Okay, so you should have all these things so that you have reference at the end of the day. If you hit your stop loss, you will not repeat the same mistakes that you did previously. You get it? Okay, so this is how to design a trading plan. Okay, this is how to design a trading plan. Okay. What again? Yes, I think basically that's all. So we've spoken about, I don't want to go into the deep side when you are having a losing streak. When you're having a losing streak, you can go for vacation, you can go and do the do. The do helps you to release stress. It's very important. Okay. Or you can go for vacation, you can play video games. You see, a lot of traders love video games. So you can also do that to release stress and other stuff. There are a lot of traders who smoke when they are under stress. Me, I don't recommend that. Some take a call. Me, I love the do. Okay. That's just by the way. People are laughing. Okay, so we've spoken about the strategy. We've spoken about the risk management aspect. We've also spoken the strategy. We've talked about combining technical and fundamental analysis and sentimental analysis. Okay, we've also spoken about the risk management where, hey, Sokode. Okay, so we've also spoken about the risk management aspect where we did position sizing, okay, and we use correlation to identify the assets, such that if you are trading this asset, you should not trade this asset because they have positive correlation. Okay, then trade management, when do you add on new position? Okay, so it's something I didn't tell you, but maybe another time we'll talk about that, how to add on new position. There are impulsive wave, corrective wave. So after every breakout of corrective wave, you add on a new position. You don't just add a position at one place and you'll be telling yourself, I'm stacking. You blow your account. So there's a way you have to do it. Another time we'll do that. Okay, so we spoke about the trading psychology, the emotional discipline, how to have a proper trading plan so that you not fear, and also you don't overtrade when you are looking at your target for the day and other stuff. You have to look at all those things. Okay, and the greed aspect. Now, if you have proper position size and you know that when the trade hits your stop loss, you are going to lose only 0.5% of your trade. There's no way you'll be sleeping and you'll be holding your phone in your hands like this and you fall asleep and all of a sudden you wake up and you'll be having high blood pressure. Okay, so proper position sizing is very, very important as a trader. Okay, so we've said all these things. If there is any question, okay, so I want to ask a question. If you get it right, yeah, I'm taking just 3 people. If you get it right, I am going to give you scholarship to my courses for free. Scholarship to my courses for free. Okay, before that, Adam wants to ask a question. Please, can you allow Adam to speak? And let me ask a question. So I want to ask a question. If you know the answer, just raise your hands or just type it and I would give you free scholarship to my STR strategy course and the smart. So my STR strategy course, I combine Elliott waves, harmonics, and smart money concept. So I had a theory, or I understand harmonics, Elliott wave, and smart money concept. So at a point, I decided to find a way that I can join all of them together to form a strategy and apply fundamental analysis. And that's how come I came up with the STR strategy. So I would want to give free scholarship to anyone. Okay, so let me ask a question. Now, gold, is it a safe haven asset? Is it a risk-on asset or a risk-off asset? Mercy was the first person to get it right, risk-off. Mercy, you now have a full scholarship to my, so make sure you DM me on Instagram, DM me on Instagram and I will attend to you. DM me on Instagram or Telegram. Okay, let me drop my Telegram page. Okay, so this is my Telegram page. Make sure you join and DM me the admin on Telegram and I'll be willing to. So Mercy, you've enjoyed full scholarship. So the next question, when S&P 500 is up, okay, what happens to the dollar? Does it go down or go up? Oh, the first person who had it right is anonymous. I'm sorry, I can't. Someone said Dwayne. Dwayne is not a correct answer. Weak. So the first person who had it, the second person, the name is iPhone. So I can't. Cornelius Afeni. If S&P 500 is up, United States dollar is down because S&P 500 is a risk-on asset and the dollar is a risk-off asset. So if S&P 500 is up, the dollar should go down. Cornelius, if you've gotten a scholarship to my course, so a full scholarship. So please DM me on Instagram. Please make sure you follow my Instagram handle, Dr_Harmonics, okay? Dr_Harmonics to enjoy that. Now, the last question, what is my real name? What is my real name? People are on Google. Google. What's my real name? Hey, Jesus Christ. Okay. People are typing. Okay. Stanley, you are the lucky winner. Stanley. So Stanley, make sure you DM me. Stanley, please DM me. Michael says he's not a student. Michael, you're a student. Okay, so Michael, I'll give you, Michael, you should also DM me. Michael and Stanley, DM me personally. And the four of you, I'll give you. So over to Willis Capital. Willis Capital wants to do a giveaway. So I don't know. Willis Capital wants to do any questions so far, please? Any questions so far? Any questions so far? Before I end the session. Any questions so far? My IG handle. Okay, so my IG handle, let me share my IG handle here. So at Dr_Harmonics. Some people are asking.
Hi, Dr. Harmonics.
Yeah.
Sorry to cut you short. For the questions for our giveaway as well, we would like you to ask some more advanced questions for the advanced people in the Forex industry, and then we'll also out 3 Willis Capital accounts for the first 3 people to answer the 3 questions.
Okay. So
do win. Sorry to cut you short again. If you do win, anyone who is the winner, please make sure to send a DM to Willis Capital's Twitter. When Dr. Harmonics should announce you as the winner, please send a DM to Willis Capital's Twitter, and we'll be sure to give you the accounts as promised.
Okay. Let me ask this question. If you get it, you'd enjoy some funded account. Okay, guys. Now, with Willis Capital, so I'll just relate it to Willis Capital. The first phase of Willis Capital, what is the maximum drawdown? It's here. The first phase of Willis Capital, what is the maximum drawdown? Okay, someone says, okay, so the first person to get it is Steve. Steve, congratulations. You have gotten something from Willis Capital. Steve. Okay, so make sure you DM Willis Capital for that. Okay, so let me ask a more advanced question. Now, so let me ask a question when it comes to correlation. Okay, I want a very technical. I don't want to go through strategies. Okay, when you are building a trading plan, yeah. When you are building a trading plan, name three things that should be added to a trading plan. Congratulations, Anila.A. You have a prize from Willis Capital. Okay. Anila.A. Make sure you DM Willis Capital. Okay. So the next one, I want to ask a question on harmonic patterns. Now, so what is the harmonic pattern that has the B as 88.6 to 1? What harmonic patterns has the B, the Fibonacci level of B at 88.6 to 1? Hey. Oh my God. Hey, nobody so far. Okay. You didn't teach strategy. It's just the last one. Okay, nobody. Okay. Nobody had it. Okay, nobody. So it is deep crab pattern. Okay, let me give one. What is the only harmonic pattern that has the B at 78.6? Mr. BVLGARI. Is it Bagari? Congratulations. The answer is butterfly. Butterfly is the only harmonic pattern that has the B at 78.6. Congratulations. You've won an account with Willis Capital, Mr. Bakari. Okay. I think we are done. Thank you very much for having me. Make sure you follow me on Instagram at Dr_Harmonics, and hope to see you again. And make sure you join my Telegram community, Boa FX on Telegram. Don't fall for scammers because there are a lot of scammers. Okay.
Thank you so much, Dr. Harmonics. Thank you for being this webinar. Thank you for being our special guest today and for all your words of wisdom. We appreciate this session, and we hope to hear from you a lot more. And for any of you guys that won for the Willis Capital, please send a direct message to me with your email, and we will take it up from there. Thank you all for joining this, and we appreciate every single one of you, and we'll see you on our next episode. Thank you, Dr. Harmonics, once again.